Hi friends, Namaste. I am Chandrakanth. Welcome to Mr. Chandrakanth YouTube channel. In this video, we will learn about what is the purpose of accounting and what is the process and flow of accounting with examples and what is the classification of accounting. So we will discuss these three concepts. Please watch until last minute. You will get some knowledge. What is the purpose of accounting? The first concept is what is the purpose of accounting? So the main purpose of accounting is to record the business transactions in a systematic manner and ascertain the financial position of a business is called the main purpose of accounting. So the main purpose of accounting is to record all business transactions in a systematic manner and to find the financial position of a business. So one of the example is if you have a business, so in daily basis you are purchasing and selling of your goods. So if you not recorded those transactions means, so one particular point of time, so you don't know or you can't remember how much goods you purchased, so how much goods you sold and how much stock still available in business. So if you didn't record the book of accounts means, so if you didn't record the business transactions, you don't know what is the exact business sales and purchases and stock. So if you are using accounting, so you will record each and every transactions and so easily you will know the one particular period of time, so how much sales happen, how much purchases happen, still how much stock will be there. So the accounting is a mandatory for each and every business to know the financial position of a business. So this is the purpose of accounting. And second one is process or flow of accounting transaction. Here the process of accounting or flow of accounting. The first step is identification of a transaction. So the process of accounting, the first step is identify the transaction. So how we will identify the transaction means, so by using invoices or by using bank statement. So by using invoices or by using bank statement, so the transaction happened on particular date. So after identify the transaction, we need to measure the transaction. So we need to measure the transaction, how much cost incurred on that transaction. That is called measurement of a cost. And third step is to record the transaction. So we need to record the transaction into book of accounts. Then we need to classify the transaction. So we need to classify whatever recorded transaction and summarize and analyze and interpretation and communicate to owners or shareholders or management of a business. So this is the flow of accounting. So we will see one example of accounting process. Suppose we purchase a printer worth rupees 5,000 for office purpose. Suppose we purchase one printer worth rupees 5,000 for office purpose. So which was ultimately shown in financial statement as a expenditure of the business. So okay, printer purchase means there is an expenditure for the business. So now we can see the accounting process. So the first step is identification. So the transaction identified was the purchase of printer. So by using invoices or bank statement, we identify the transaction. So we purchase a printer. That's called identification of a transaction. And second one is measure. The cost of the printer was measured as 5,000. Okay, the cost of the printer was 5,000. That's called measure. And we need to record. So the transaction was recorded in book of accounts in a systematically. So the cost of printer is 5,000. We need to record the printer was purchased rupees 5,000. That's called record. And after record, we need to classify the transaction. The transaction was then moved to ledger and classified with similar transactions. So we need to classify the transaction in the ledger books. So after the classify the transaction, we need to summarize. So here the ledger balance was summarized and converted into trial balance and financial statement accordingly. So here summarization means, so we need to record, we need to post. So after posting, we need to convert that ledger balances into trial balance. After that, financial statements will prepare. And analyze. So after summarize means then analyze. So in analyzation process, the purchase manager analyzes the financial statement at the year end. So after preparation of a final financial accounts, so the purchase manager will analyze the financial statements at the year end. After analyzation, so interpretation. The analysis leads to interpretation. So here interpretation means we was purchased the printer cost worth rupees 5,000. So that printer was costly, and so the cheaper alternatives also available. That's called interpretation. And the communication. Final step is communication. So after identification to interpretation, based on these data, so communicated to owners as a recommendation basis for future purchase of this kind of transactions. So this is called the process or flow of accounting transaction. Okay, so we purchased one printer worth rupees 5,000 for office use. So first of all, we need to identify the transaction. Then we need to measure the cost of the product. Then we need to record the transaction. We need to classify the transaction, and we need to summarize in financial statements, and we need to analyze. So the purchase manager will analyze the financial statement and interpretation. So the analysis, after analyzing, the printer was costly, so the other cheaper alternatives also available. So after interpretation, so this was communicated to owner as a recommendation purpose. That's the process of accounting. And third one is classifications of accounting. Naturally, there are different classification made by experts. These classifications help students to cover all areas and learn the concept clearly. So in accounting, many classifications is there. So in each classification, so the students will help to cover all areas to learn. So there are mainly three subfields of accounting, such as cost accounting, management accounting, and financial accounting. So in classification of accounting, three main subfields of accountings. Those are cost accounting, management accounting, and financial accounting. So we will discuss these three classifications of accounting. First one is financial accounting. Financial accounting is a field of accounting that focus on recording, analyzing, and reporting of a business transactions of the company. The financial accounting is a field of accounting. The financial accounting will focus on recording, analyzing, and reporting the business transactions of a company in order to generate statements that are used by internal user as well as external users to assess a company financial position. financial accounting will record, analyze, and report the business transactions in a systematic manner and prepare the final statements. So those statements will help for internal users, external users for decision making or to know the financial position of a business. So in financial accounting, there are the 5 main statements available. So the financial accounting peoples will prepare 5 main statements. One is statement of changes in equity, statement of cash flows, income statements, noted to financial statements, and balance sheets. So in financial accounting, so these statements will prepare. So these financial statements can allow investors and organizational leaders to assess the financial position of a company. So to assess financial position of a company and examine its overall performance. And the financial accounting will record in 2 methods. One is cash accounting, another one is accrual accounting. The financial accounting, what will do means to record the cash transactions and to record the accrual transactions. The cash transactions means, so when the employees or in the company will spend some expenditure, so the employees will spend some expenditures. So at the time, so the cash transactions will happen. So by using the cash vouchers, so we need to record the cash transactions as well in financial statements. So in accrual accounting, these accrual accounting will, when the transaction happened, at the time we need to record. So that's called accrual. So this accrual accounting, the bookkeeper will record all the financial transactions. So those transactions when it happened. So they will segregate the transaction credit as well as debit. So the payment made by the employees. So the payment made by the employees or payment made by the others. This is also known as accounts payables and accounts receivables also fall under this category only. So this type of accounting gives a clear picture of organizational cash flows and income statements and financial position of a company. So who prepares the financial accounting means bookkeepers, accountants, internal auditors and external auditors. So these peoples will record all the business transactions and ascertain the financial position. To report the financial position to the shareholders or owners of a business. Second one is cost accounting. Cost accounting will deals with keep recording, analyzing and summarizing the cost of the product is called cost accounting. So the cost accounting main role is to record, analyze and summarize the cost of the product. Cost of the product of a business organization. So cost accounting is a method of accounting so which aims to capture the total production cost of the product. So total production cost of the business in terms of variable expenditures or fixed expenditures. So in cost accounting there are several forms of a cost. So here fixed cost is there, operating cost is there, direct cost is there and variable cost is there and indirect cost is there. So in cost accounting there are the different type of cost is there. The cost accounting used to assist decision making by the management within a business. In sometimes used to assist the decision making by the management within the business. So the cost accounting can be most useful in budgeting and setting up of the cost reducing system. Execute or observe the cost of the different aspects example labor cost, material cost, and miscellaneous expenses to calculate the total cost. So moreover, these elements are costs for a company that can be either direct or indirect. So it will be a direct impact or it will be an indirect impact. So the cost accounting will keep the record, analyze and summarize the cost of the product. So the total cost of the product. And who prepare the cost accounting? So the cost accounting will prepare the cost accountants and the purchase department. So they will prepare the cost accounting statements. And third one is management accounting. So the management accounting is an executive board of organization. It's an executive board of organization fully manages the management accounting. So the executive board of organization fully manages the management accounting. So it's related to organizational decision making in different aspects. Executive board will take organizational decision making in different aspects. So it's mainly done based on the reports on cost accounting and financial accounting and other data. So the executive board will make decisions based on the reports given by the cost accounting and financial accounting. By using these financial statements, so the executive board will make the decisions for organization growth. So the management accounting collect data from cost accounting and financial accounting. From cost accounting, so they will collect the cost of the product and profit of the product. So analyze the profit and cost volume of the product and analysis of the standard cost and variance. So and the method of differential and incremental of costing. So by using cost accounting statements, so the management will take the better decision to control the cost of the product, internal cost as well as external cost. So and financial accounting base the analysis of data present in the financial statements. So whatever the financial management will record in prepare the financial statements based on the financial statement. So the management will take decisions. So to analyze the cash flow statement. So to analyze cash flow of the organization. So the cash flow of the organization, whether it is good or bad. So and analyze the return on capital. So by using the financial accounting statements, so the management will analyze the return on capital. How much capital invested, how much profit we generated. And the main functions of management accounting is to analysis of your profit. The management accounting will analyze profits. Previous year profit how much and this year profit how much. So and control the performance variation. So in previous year the performance is good. So now this year the performance is low. So the management accounting will make the decisions. And forecasting of the cash flows. Now this year the cash flows how much is there and next year coming years how much will be happen. So the cash flow of the forecasting of the cash flow also the management accounting will do. And decision making. The main purpose of the management accounting is, the main function of the management accounting is to make the decisions based on the financial statements. So by using the financial statement and cost accounting statements, the management accounting will make the decisions and to run business for a long term period of a time. For a long period of a time with effective management. So I hope this video will help you in future also. Thank you friends.